Hey guys, welcome back to another YouTube video. So in today's video I am going to discuss a new model which is used by trading the liquidity. So without wasting time, let's get started. So welcome back to my YouTube channel. So today we are going to discuss about this model, which is like, in this model you only have to look for the stop losses of the retail trader, and you have to look for the supply and demand zones, and you have to just do the opposite of the supply and demand zone. Okay, and you have to don't yeah you should not use the, in this strategy you can use the fair value gap and order block, but then also you can, without using fair value gap and order block, then also you can trade with this strategy. So here's the proper example. Okay, will show you some examples right over here, like 5 or 6 examples. So first one is this one. Okay, if you guys can see over here, this was creating a support, right? It was creating a support, and all the retail traders, okay, they will be looking this line as a support. And now what they will do is they will just mark a resistance, they will mark the support, and then they will mark this zone right over here like this. And now what will happen is they will take a buy over here, they will see a bullish engulfing right over here, and look at the time below. Okay, you have to look for this liquidity runs in a particular time period in a day. Okay, it can be from 10 to 11, or it can be the afternoon session also in nasdaq, and it's different for forex and all. It's like London kill zone and New York kill zone. So right over here people will take buy right over here. Okay, and then what they will do is they will put the stop loss where, just below this structure, right? As the book says, and as the retail approach says, that you have to take a buy over here and you have to put your stop losses just below this. Okay, and now what will happen is then market will go and take the low right over here. At this moment the retail trader will think that it is a breakout. Okay, but the thing is we have to do opposite of it. We have to just buy a little bit below of this demand zone right over here, and you can put a particular stop losses. So for example, you can do it like this, 30 points, or you can do 20 points. The stop losses are different in every pair. In forex it's different, and in this nasdaq and indices it's different. So you have to take a buy right over here. Okay, and then you can target for whatever you want. So I will show you some example. This was the example which I shown you right over here. The second one is this one. Look at over here. People will see that price fell down from here. Okay, and now it was what is this candle? This line is a resistance, and this candle will be a supply zone, right? Because they will see that market reached till over this supply zone, and then it fell down. And then in the afternoon session what happens? Price goes up like this. And now when people will see that this candle broke out this structure, they will think that this is a breakout. Okay, and they will take a buy right over here. But what I told you, we have to do the opposite of them. So we will just take a sell right over here, and you can put the 30 points or 40 points stop loss right over here, and you can target this low. Okay, or this low right over here, and see, like, this strategy can give you a sniper entry, because you're not waiting for, and it's risky. Like in the beginning you will feel like it will give a breakout and it will keep on going up, but the thing is that when you go for fair value gap and order block, okay, it's kind of it's a little bit advanced, that if you're seeing the liquidity run in 5-minute time frame, then you will go on 1-minute time frame to look for a fair value gap or order block right over here. But the thing is that will be like a little bit confusing for new beginners and the guys, those who are trying. And so that's why you have to trust on yourself, because first you do it this strategy on demo. Okay, then you can trust on yourself. So then you have to take a sell over here, 30 point stop loss, and then you can target whatever you want right from here. And another one is this one. Okay, and if you can see over here, first price took these two highs right over here, and then people can see that this is, what is this? This is something like what you call the moon. it's some term in retail trading that it's like a more morning star or something like that, that type of candle with a long wick. So now what the other people will do, they will mark this candle or this candle as what, the demand zone. Okay, and now price fell down right over here, and now they are looking over here that it is a breakout. Okay, and now look closely, it's a breakout, and then they will look for confirmation candle, and they can see this candle. This is a smaller version of this candle. Okay, they will see this candle and they will take a sell right over here. And what happens after that? Price kept on going up and up. So this is the thing that it's quite confusing also, but the thing is it's easy for us because we are just doing the opposite of the 90%. Okay, to be in a 10% you have to do the opposite of the 90%. So that's why if people are taking buy from the demand zone, okay, we have to just wait for their stop losses to be taken, because the big guys, they want to do, because the algorithm is designed in such a way to take the stop losses and to maintain the liquidity in the market. Okay, and the second one is this, and another one with this one, that you have to know for the bias also, and I will tell you about that in a few minutes. And if you look at over here, okay, price went up over here, and now you can see that it's this liquidity run was happened after what, 3 o'clock in a London kill zone. Okay, went up over here at 1 o'clock in merge of Asian and London session, and then what happens is falls down. Okay, now what people will think as like the retail trader, they will think like this is a, because they can also see a higher highs and higher lows. Okay, it's not like that they cannot spot out higher highs and higher lows. So they will look at like over here, this lower low, lower high, lower low, and then they will mark it as a higher high. So now they will mark this one as a higher low. Okay, price goes below this higher low, and now they will think that this is a market structure shift. So now this is a supply zone for them. Price just goes little bit above above this supply zone. Okay, and then it keeps on falling like this. Okay, so like this type of another, like this one, you can see this is a normal, like, and another thing is the liquidity run will be not like a similar pattern. Okay, because you can spot out that it was different right over here. Okay, it was different over here, and it was different right over here, the pattern of the entry. Okay, it's different right over here. It's not like a same pattern. It's not like that you will get like this type of entry every time. You can get this type of entry also, but the thing is you have to spot out the supply and demand zones, and you have to just do the opposite of that thing. Okay, because in a simple word, this how I can only explain, because this is in a simple words, that you have to just do the opposite of the 90% of the traders. Okay, and now you look at over here, it was a breakout, but then also it kept on falling. And then another one is this one, it went little bit below over here, and this was the previous day's low. Okay, and everybody knows that there is a sell side liquidity below the previous day's low, but this was a good, what you call, the demand zone, right? Price just goes little bit down the demand zone, and I can say that this was in a London session. Okay, and then it goes little bit below the demand zone, and if you want to enter, if you want more confirmation, then after this liquidity run, you can, it's a 15-minute chart. Okay, after this liquidity run, you can go in 5-minute or 1 minute to look for the fair value gap entry right over here. But the thing is, I will just enter right over here, and you can see around psychological level also right over here, 1.08100, right? So you can enter on that bank level right over here, and then you can target for previous day's high. Okay, and when it has taken the previous day's high, and then you can see the movement one more time, because when price went above right over here, then all the traders, they thought like this is a demand zone. Okay, now where's the liquidity in this run? Now some of our SMC trader and those guys, those who say that they trade SMC, what they will do is they will think like this is an order block. Okay, or they will think like this is also an order block because it ran into a liquidity, right? But the thing is, order blocks, like sometimes people merge order block and supply and demand. Okay, like it's supply and demand zone, but the thing is that people say that it's a order block, it's a fair value. No, you have to just look for the liquidity, and then you can look for order blocks or fair value gap. Okay, so that's why in this whole move over here, it has taken all the buy side liquidity, and now where's the sell side? Below this, just goes below and takes that. And after that, what happens? Price went below this low and this low right over here. It just goes below over here, and you can see that it gave a break and retest. This candle, bearish engulfing, it gave a type of retest from this structure. But what happens after that? It kept on going up. Okay, so it's totally rigged, it's totally controlled, and it's totally opposite of the 90%. Okay, if 90%, and this is the thing, if 90% of the people are using a strategy, okay, if they're using some strategy, 90% of people are using some strategy. So if in the New York kill zone, if the big guys, they can see that 90% of people are buying in a this way or selling in a this way, then also they will manipulate, and then they will take your stop losses, because they just want liquid. It doesn't matter what's happening on the chart. Okay, they just want to see that where are the orders sitting. Okay, and this one, another one, and this is also a clean setup, and this was the high, and this is a pure supply, this is a pure what you call resistance and a supply zone, right? Price just goes little bit above the supply zone, gives a breakout, and now people will be buying right over here. And I told you that where you have to enter just above this. And if you want a little bit good entry, you can enter on a bank level also, like this. There will be a bank level, you can just put your limits over here, sell limits, and then you can see from here it keeps on falling and it's going down. And now if you go on this one, okay, these were the examples which I showed you. And now we have talked about the strategy, that we have to just do the opposite. We have to just look for the opposite of and how to enter. So for example, right over here, it's like I should show you in euro dollar. Okay, look at over here. Okay, now you can see that this was the low, and now this is a support, what do you call it, the support, right? The support. And then now your entry, you want to look for some bank level or some round psychological level below this liquidity pool. Okay, you can see that over here there are lots of stop losses. That's why it's type of like this type of big candle, because this want to show that it's about to break out and it will keep on going down. But you will do the opposite. You can see that it has given a breakout right over here. Now you have to do the opposite. Okay, and now you have to put your buy limits right over here, and you can, for euro dollar, you can put a $15 stop loss, 15 pip stop loss. Okay, and now you can target for this relative equal highs, or you can target for the previous day's high. Okay, now you understood that how to enter in this market and how what's the strategy is. You have to just do that opposite, and you have to just look for the supply and demand zones, and you have to just look for the traders stop losses to be taken. So you have to wait, you have to look for it. So if price is roaming around right over here, don't take a buy right over here. Just wait, that price should go below this low, and then you will take a buy. Okay, and now this has happened. And now another thing is a risk management. Okay, so for me, the risk management is that if you put a 15 pip stop loss and your target is 1:1, close the half of the position. Okay, so if you've taken the 2 standard lots, okay, and you got 1-on-1, close the 1 standard lot. Or if you're risking like $1,000, so close 500 when you get 1:1, and then do break even and let it go. Because what will happen is, if you do that, so from in 10 trades, if you hit like 8 of them or 7 of them break even. Okay, because this is the truth, you will not hit every time, you will not hit the winners. You can hit 1-on-1, but then also with the break even also you are winning, because you are closing the partials. So from 10 trades, you are hitting on 6 break even and 1 or 2 winners only in a bad case, in bad scenarios. Okay, in 2 winners, 6 break evens, and 2 losses. Okay, then also you only got 2 winners and you got only 2 losers and you got 6 break even. Then also you will make a lots of money because you're closing the partial on those 6 break even trades, like $500 on those 6 trades. Then 6 5s are 3,000. Okay, the 3,000, and then the winning amount will be add up into that, and then you can minus the losses from that, and you will get that how much money you are making. So that's why the risk management is important. Okay, close the partial at 1 on 1 because we never know. It's whenever you are in a trade, it's a 50-50 situation. Okay, it doesn't matter, it can break out and it can keep on going. I'm not saying that it will happen every time. That's why we are using a risk management. Okay, and now another thing is the time period. You have to just look for this liquidity runs like this in a particular time period. Okay, the particular time period will be in forex is like a New York, this London kill zone and a New York kill zone. Okay, this will be a particular time period. And in nasdaq, okay, in nasdaq right over here, it will be after 10 o'clock. Okay, and in the afternoon session after 2 o'clock. Okay, so this will be your time period. In this time period you will look for the liquidity runs. Like look at over here also, it went just little bit below over here, it just went a little bit deep right over here, but you have to put a little bit bigger stop loss. And another thing is, if you can see that it is a demand zone. Okay, and if there is a fair value gap below the demand zone like this, then only use that then only use that fair value gap for entry. Okay, and if there's any order block below this liquidity pool, then also you can use it. Okay, so that's how you have to enter in the market. And another thing is the time period, and this strategy happens on any time frame. Now you might be thinking that this does not happen on 1 minute. Like it happens on 1 minute also. Like look at over here. Oh, it's a nasdaq. Wait. Yeah, on 1 minute you will get a bunch lots of entry. Like oh, look at over here, it's like a double top. What happens when the London kill zone starts? It just goes above. But if you wait for a fair value gap entry right over here, or you can get an entry with a breaker type of thing over here, but the thing is you will not get the sniper entry. For sniper entry you have to be little bit extra, you have to be little bit courageous. So you have to take a sell from here and a 15 pips stop loss, and then you can target for this low or this low right over here. Okay, and in 1 minute it will happen more times. Okay, in 1 minute it happens, in daily time frame it happens. Okay, like look at over here, it just goes little bit below this and then it keeps on going up. Now now the euro dollar is going below this, so when euro dollar will cross this low, then I will look for buys. Okay, so it happens on any time frame. You can take trades with this strategy on any time frame, but for me I personally use 15-minute time frame, because 15-minute is a bellwether chart and you can easily do scalping with 15-minute, or you can do a swing trading also. Okay, and another thing is you have to know the order flow. Okay, so in 15-minute it's a little bit confusing that where's the market going. Okay, so you have to go on 4H and look for that what's the overall trend, and there's a little bit deep conversation about to know about the order flow, that you have to look for the interest rates. Okay, you have to look for the inflation rate, and you have to look for there are lots of things, and I will make another video on that. But the thing is, you can see with your eyes that the market is falling, and now where's the liquidity pool? Right below this. So yeah, we can see that this is a bullish move right over here, but then also our bias is bearish. Okay, so on 15-minute time frame we will look for the buy side liquidity only, not the sell side, because the sell side will give you a scalping entry, not a long-term entry. Okay, so I hope you understood. And you have to go, yeah, so you have to go with the order flow. So look at over here, if you take in a bearish order flow, if you take a buy from this liquidity, from sell side liquidity, you will just get a small scalp or like a small trade. But if you take in a bearish order flow, if you take a trade from the buy side liquidity like this, you can ride all the trend like till over here, and you can make a lots of money from that. So that's why if you are in a good, like this happens on every time, but if you're with the order flow, you can make much more money with this strategy. Okay, so I hope you guys understood, and if you guys have any questions about this, okay, that you any questions that you didn't understood, that how to enter or like anything, okay, just comment down below and let me know that what are your questions, and I will make another video on it. So yeah, this is it. So please like, share and subscribe, and turn on the post notifications, because I will be keep on making these videos from now, because I will take out some time to do all of these videos. So until next time, peace.